Hello, and welcome to our latest video chat in the Money Show Expert Interview Series. I'm Mike Larson, Editor-in-Chief at MoneyShow, and today I have the pleasure of speaking with Carley Garner, Senior Commodity Market Strategist and Broker at DeCarley Trading. Carley, thanks for taking time out to chat with me today.
Thanks, Mike. It's my pleasure.
Great. Well, your focus area is obviously commodities and how to trade them using futures or options. So why don't I just start with why you believe investors in this market can benefit from branching out into that space rather than just staying focused on traditional stocks?
Well, there's a couple components that commodities might bring to the table for certain types of investors. One is diversification. It gets people involved in things that are other than traditional assets, and ideally, not always, but ideally those assets are negatively correlated or at least not correlated to traditional stocks and bonds. But also what people fail to realize is or recognize, I should say, is the futures markets were created for hedging purposes. They're there for people to hedge risk. So even if you're not interested in taking risk in commodities, you could also, you might be interested in hedging risk. And it could be a small business that wants to hedge their interest rate risk or their energy cost, whether it's crude oil or natural gas or whatever it is. So there's all types of purposes and uses for the futures markets that most people don't even consider. And the exchanges have created a lot of very small products. They call them micro products, and it allows people to hedge even small amounts of money. I mean, for example, somebody looking to hedge a stock portfolio could use a micro S&P future, and one micro future roughly hedges about $25,000 worth of stock. So even beginning investors might find it useful to have some sort of hedges in place using micro options or micro futures. So it's for everybody.
Got it. Okay. Well, obviously you're following the commodities markets every minute of the day and so on. So I'd kind of like to know your thoughts on some of the big commodities that are grabbing the headlines right now. A logical place to start would be oil in light of the surprise Saudi-led production cut we had from OPEC plus. How do you see things playing out in that market?
So we have obviously been watching oil pretty closely, well, forever, but particularly the last year or so. As soon as Russia invaded Ukraine, things got a little bit wild, and it's taken a long time for the markets to try to normalize to more normal volatility, normal market participation, and I think we're getting there. But what we had been waiting for was a kind of a capitulation, flush out of all the longs. I think we can all remember when Russia invaded Ukraine, oil jumped ridiculously high, traded as high as $130 a barrel, and it basically was a $40 rally in a very short amount of time. But the ironic thing is, when oil was at 130, even at 120, the masses, all the analysts were calling for 150, 200. Very few people thought that oil could go lower, and actually, we did believe it could go lower simply because everybody was already long, everybody was already bullish, and sometimes you just run out of buyers. But we needed to basically correct all of that excess, and I think the move to 65 did that. From here, I think the path least resistance is higher. I think we've gotten beyond all the market positioning that's influenced prices, and now we get back to fundamentals. And it seems to me a lot of those fundamental stories, like the Chinese reopening, the political turmoil, OPEC, those are all going to come into play now that oil is corrected. And I think we're probably looking at the high 90s as my best guess.
Okay. All right, sounds good. Why don't we shift a little bit to, another hot topic in commodities are really precious metals, and that would be gold, right? I mean, it's been bouncing around at or just above that $2,000 an ounce level. I'm curious if you see a clear breakout coming. We've been in this sideways chop for so long, or if you think we're going to see more of that, for the rest of 2023.
I'm in the camp that believes that a breakout is imminent in gold. The two things that were holding it back last year were a higher US dollar and higher interest rates. And those two things have corrected themselves, at least started to, in interest rates, and the dollar has given back a lot of its gains. And so now that those have normalized, it kind of opens the door for the markets to react to the traditional gold stories. Again, political turmoil, inflation, those sorts of things. And I think that's exactly what we need to see gold break above 2,100. This will be the third or fourth time we've tested that level in history, and so far we haven't had any luck there, but I think maybe this is it. We'll see.
Got it. Okay. You brought up the dollar, and obviously that comes into play to some degree for all commodities or many commodities. Any thoughts on what you think is going to happen there? I mean, the Fed situation is in flux. Most people seem to think that they have one hike left. What's your take there?
You're absolutely right. What the dollar does impacts everything else. And we've been talking about for the last several months If the dollar heads lower, which it is, and I believe it will continue to head lower, at least for now, that's basically opens the door for an everything rally. What I mean by that is stocks, bonds, commodities, all can go higher, assuming that there's nothing else getting in its way. But the general path of least resistance would be higher for most asset classes as the dollar weakens. And I think the dollar index, if you follow the index that trades on the ICE exchange, it's a futures contract. Right now it's trading at 101, somewhere in that ballpark. I think we're looking at like the mid 90s, and that again will help other assets.
Got it. Any particular corner of the commodities market I didn't touch on yet that you and your team find particularly attractive right here?
So everybody wants to talk about natural gas, so I'll mention it. Natural gas went from $10 last year to now we're sitting on around $2. I started turning bullish a little early in the high threes, mid threes, but to be honest, in the overall scheme of things, $2 to $3 is cheap for natural gas, given all the things that we've got going on in the world. And again, the market needed to correct all that froth at $10. When natural gas was at $10, nobody thought it was going lower. Everyone was looking for $15 or $20. And so we just had so much speculative excess built in the market, it needed to clear itself out. And I think we've done that. So I'm looking for natural gas to start heading the other way soon.
Got it. You're obviously going to be joining us at the MoneyShow Traders Expo in Las Vegas. It's coming up later this month. Any kind of sneak peek you wanted to offer of what you think you're going to be talking about there for people in attendance?
Absolutely. We're going to be talking about crude oil. We're going to talk about option strategies using micro futures and other ways to approach the market. So even those traders that are looking to speculate in small amounts with low risk can get involved with it if they'd like to.
Awesome. Well, Carley, thank you so much for your insights, and thank you all for watching. I do hope you enjoyed this interview. If you did, you're going to love seeing experts like Carley in person. Again, the Money Show Traders Expo is from April 24th to 26th. We're going to have more than 100 top speakers, more than 100 presentations, keynotes, panel discussions, the whole 9 yards. So please click the link in the video description below to learn how you can join us. And Carley, thank you so much for your time.
Thanks, Mike.